Hi, it's Mark Coopersmith, and in my ongoing series of conversations with entrepreneurs, investors, deal makers, it's a real pleasure for me to spend some time with Roger Spitz. Roger, thank you for sharing some time with us today.
Great, my pleasure, Mark. Fantastic to be with you.
So Roger and I have crossed paths in a number of places over the years. We are both advisors to the Skydeck UC Berkeley Accelerator, where I've been since its founding, and Roger is also an advisor to a number of companies there. And we've both worked with the NASDAQ Entrepreneurial Center in a number of programs as well, which was great. And there are probably several others, if we really unwound it, where our paths have crossed over the years. Another area where we have a lot of shared experience is helping founders launch companies globally, whether it's in the US or Europe or elsewhere. And in particular, when Roger and I were comparing notes, I run a number of programs with European entrepreneurs and grad students. And Roger has run a number of funding and investment groups globally. We say, oh my gosh, we have some shared experiences, and we wanted to get into that. So Roger, we're just going to jump right in a little bit. Let me provide a little bit more background on Roger. So Roger is the founder and CEO of Text Essential, which is a future-looking and foresight practice, which we're going to talk about in another video when we say, how do we forecast the future? How do we understand what the implications are for innovators and entrepreneurs? For today, we're going to focus on Roger's experience helping founders get funded and launch their businesses globally. So Roger, if you don't mind, could you just share a little bit of background, kind of how you've done that over your career and where you've done that?
For sure, that's great. Thanks, Mark. So I started my career in venture capital, but the bulk of it, the past 20 years, was I was global head of M&A for technology, advising in the investment banking business of BNP Paribas. I was based in London for many years and opened up the M&A team here for technology, media, and telecom in San Francisco a few years ago. So covering globally and advising companies, whether they're fundraising, buying, selling, JVs, always on the sort of a strategic M&A advisory side.
Yeah, so another really interesting conversation we might have is what not to do, right? What to avoid when things go wrong, and we're going to try and anticipate that a little bit in our conversation here today. So the entire structure from kind of early formation and early funding through growth stage funding, through mergers, acquisitions, IPOs, the entire gamut. Is that right, Roger?
Mm-hmm. Correct.
Great.
That's everything I've been involved in. Yeah.
So the primary topic that we wanted to address in this conversation is where you should launch your company. And we understand that founders, I work and Roger work with founders from around the world, from the US, from Silicon Valley here in the San Francisco Bay Area, where we're both today as we record this, to across the US, to Europe, to rest of world. It could be Asia, Southeast Asia, South America, Africa, the Middle East, Israel, wherever it is. So there's a broad spectrum. And the primary focus of our conversation is US, Europe, but we're going to look to see if we can touch a little more broadly as well. So with that as context, I'm going to kind of throw it wide open, Roger, and kind of have you set the table. Where should a founder start their company? And that's kind of, yes, it's markets, but also from the standpoint of being able to gain that necessary early funding.
Yeah, no, all good, very important points. I guess the starting point is really what the objectives are, right? There's I try not to be too cookie cutters. I think it's really important to think about what are the objectives and where's the sort of company founder operating in. And just to give an example, there's certain areas in terms of breakthrough science or technology where Europe is particularly strong. And so when you're looking at the relationship with strategic or some more kind of institutional organizations, and you're looking at, whether it's applications in synthetic biology for agriculture or pharma, whether you're looking at energy transition, where Europe is very strong for climate change, renewable, low carbon, or even other areas, in terms of, to a degree, even though it doesn't have the scale of the US, there's some very important niches in machine learning and brain-computer interface, etc. So the first point is really objectives, where are your strengths and what you're kind of, seeking to do. And then, of course, we can zoom into a few features which are different from one region to the other. And I would also, and you intimated at this, Mark, differentiate what's happening now, what's been happening in the past few years, and how one might think about life going forward, because there are a lot of changes, not just relating to the pandemic, but even more generally around national security and other factors. But
Perfect. Let me jump in because there's a lot there, and let's kind of take that and dissemble that a little bit more. So one of the key things starts with where you're located. If I'm an American, or let's say I'm a French citizen or whatever, or I have my team, how important is it that I stay in my home country? And I get this a lot because I have many, for example, Europeans that come to UC Berkeley
yeah,
to study and say, I love it here in Silicon Valley, maybe I should launch
yeah,
my venture here, even though their colleagues, their markets, all of that may be back in Europe. So
yeah.
how much of it is just kind of, where are you when you start?
No, I think none of it should be the way are you personally. I think one really looks at the access to funding and the exit, where including regulatory and likely buyer appetite. Even though it's global, it still can have an influence if you're
Right.
closer to country buyers. I think you're going to want to look at obviously the customers at the end of the day, and the go-to-market strategy, where the talent is for recruitment, although you can think globally slightly to a degree on that. And then what kind of processes and transparency and openness would there be if you are not kind of local? So I personally think that you need to take all those into consideration, and that will kind of help the thesis of funding, life cycle,
Right.
go to market, and ultimately exit if that's the objective.
Well, and I guess there is one other consideration, which we do have to be cognizant, especially in these times, and that is, where do you actually have the right to be able to live and
Yeah.
work? And that's gotten a little bit more challenging for many foreigners when it comes to setting up shop in the US these days.
Yeah, no, that's right. And it's not just in terms of, I mean, you're so right. It's where you're allowed to live, but it also has ramifications in terms of where you might be allowed to sell to,
Yeah,
or what are the regulatory constraints or environment of operating in a particular country versus another. So there's some obvious features which are, for instance, GDPR in terms of everything that
yep,
that entails. Then there's some other features in terms of the fragmentation of Europe. There are many different markets. And then there's, to answer also the question more specifically, there are different features in terms of funding. I think Europe is very strong at seed to a degree, although it's less liquidity than the US, but it's still
right.
pretty strong. A bit less so in terms of growth. It might be more discerning in terms of the need for revenues versus growth. So there are certain features which are a bit different. The US is going to make a big bet to get the 1 in 10 home run, right? So that has
Right.
different approaches in terms of investment strategy and
Yeah.
philosophy.
Let me kind of tug on a couple of those right there. One of the things that you said, there were two or three things that I think are important to pull out from what you just said. One is that in many markets in Europe, there is increasingly a lot of good early stage seed funding available.
Mhm.
There are various government funds that are available. There are grants that are non-dilutive that are available. There's a number of different types of capital that are not as prevalent in the United States. And you don't have similarly necessarily that same incredibly intensive level of competition for those funds. So access to some of those funds may actually be easier in markets. You wouldn't think so because there's so much
Yeah.
money in Silicon Valley, but access to early stage funds, especially in certain categories, may be better outside of Silicon Valley.
Yeah, no, listen, it's a super important point you're raising. And that's one of the reasons I always start with what's your objective, what
Right.
business are you in, where are you strong? Because let's take, for instance, space. Space is an interesting one. And I actually advised on quite a few of the space deals early in my career. I was also covering aerospace and
And by
defense.
space, we're talking about outer space, not like we work.
Literally out of space.
Yeah.
No, absolutely. So you're looking at that. And it's very interesting the point you raised, because initially when I thought about space, I thought about some of the funds, the angel funds like Space Capital or Space Fund or Hemisphere Ventures in Seattle, and all these, Starbridge, all these dedicated long-term funds you have, which are very US, to
Right.
think about investing in space, maybe even commercial or longevity. These are very big punts for VC, right? And Europe is not kind of as focused on that. Having said that, for space, exactly to your point, if you take Seraphim in the UK, which is backed by Airbus, SES, Leonardo, which is the Italian who own Telespazio and a lot of the joint venture with Thales around space.
Right.
There's a huge support, not to mention the institutionals like BPI France and others who would invest and support the space industry. So if you're looking at space, in the US, you're thinking more commercially, and it's a bit more, tough environment to get into, the usual suspects on the US side in terms of these funds, and it's probably more competitive, although nascent. Whereas in Europe, if you have the backing of the institutionals, plus the industrials, plus those are your commercial partners, and you have very strong technology, you might actually think that that's a pretty solid proposition for a startup to be working directly.
Yeah. Well, the other thing that's interesting about when we look at space, we typically can think of SpaceX and Blue Origin and all of those. But if you look at, say, at the French marketplace and the cluster around Toulouse, where there's Thales and others, there's actually a very vibrant kind of both mature, but also series of early stage companies that are launching that get a lot of support, both governmental and private sector.
Right.
So there were two other things that you mentioned in your comment before that I thought were interesting that go outside of funding, but lead to funding. And one is, what is the environment like in your market? So if you are dealing with a startup that maybe runs into privacy issues, GDPR versus, even though it's evolving, some of the privacy considerations in the United States bring up really different opportunities and restrictions. So that's something to look into. Similarly, if you're in medical devices or biotech, you've got very different go-to-market considerations with regard to trials and releasing products in those markets as well. So a lot of companies will actually prefer to launch in Europe because there may not be quite as many restrictions as they run into in the US. And that provides a faster path to funding, doesn't it?
Yeah, it can. I mean, I think healthcare is a very interesting one because it's very, very different the way the industry here is. And in ways, I do agree with you that for certain companies and segments, especially maybe if you're in kind of biotech or others, or even potentially longevity, if you're smart with the relationships with the academic world and with some of the sort of companies that might be suppliers or partners, it might be that, and some of the captive CVCs, that you're actually better off in Europe and that. Because the US market, if you have exactly what's required, and it's what's needed, and you can get into, I shouldn't use this term, but the kind of mafia of the healthcare industry as it is in the US, because it is quite particular in terms of who's allowed in.
We'll call it the brotherhood and sisterhood.
Thank you. The word I was looking for.
Yeah.
But I think in that way, it's it always feels free market and US and so big. And of course, the size of the healthcare market in the US is ginormous.
Well, and it's always follow the money in healthcare anyway, right? You've got to figure out who's going to reimburse you. So you got to figure out the insurance and the reimbursement side. So yeah.
And it is a bit more kind of cliquey, to your point, on how that industry operates. And so you might find that the combination of partnerships, funding, route to market, maybe even exit is a slightly different equation, unless you have the perfect fit, and you have an abundance of choice.
Right. Then
you take your $100 million from whoever in Silicon Valley. Fine.
Yeah. But okay. So two things there that you just mentioned one thing, and there was one other that I want to touch on. One is, if you're building something where you think has a path to exit through acquisition, you may want to really identify at the very beginning where you think your best exit opportunities may lie. Yes, we know that your path may change, but where do your best opportunities to exit lie? Because you want to be in front and in the markets of those potential bigger acquirers, as opposed to in an entirely different continent.
Yeah. So I have two perspectives on that. One is the generalization, which is the US probably has an edge there, not just because they're more buyers or what have you, but just simply because the proximity of the VCs with the strategics, that kind of cycle is well versed for decades. Right. So the strategics are generally closer to the VCs. The relationship is very strong. They know what will sell, to whom, and at what point. And that obviously is a degree of maturity and relationship that is second to none in the US.
Yeah, and the investors here are particularly good at plotting that potential path to exit, and they've already got this is a 5X, this is a 10X, whatever, if this happens, right? We've been through this a lot.
No, completely. And they have that relationship already. So they're able to gauge and
Right.
stress test those assumptions during the life of the investment. In Europe, there's, of course, all these funds are very sophisticated, the Baldertons, Partech, I'd Invest and all that. So, it's very sophisticated, mature market as well. But on the whole, they're probably a little bit less intimate with the strategics and having the pulse of the strategics.
Right.
And having said that, it then goes back to the earlier, my starting point, which is what segment are you in? Because there's certain segments, I don't know, in renewable, in energy, and maybe synthetic biology, or some specific areas where Europe is particularly strong, and where if they're building the right relationships early on and partnerships, they might find that those are kind of also natural exit. And then, of course, there's the IPO, which probably the US is also a different ball game, right?
Yeah. Well, but it's interesting though, is probably yes, but there are more and more exchanges. I just this week spoke to one of the founders of the long-term stock exchange, which just began trading last week, which the entire idea is to provide greater access to capital for companies that are for-profit enterprises, but have a multiple bottom line perspective. So a longer term time frame. So there are increasingly new markets that are popping up in the US and internationally, financial markets, to provide greater access to capital for companies of all types. So I think that's, yeah. There was one other thing that, that you also mentioned, which is, I think, really important, and that is, what do you think your go-to-market strategy is? Because in the US, while yes, we have different regions, we really are one big company, a country. Whereas in Europe, while you have the EU, most of the entrepreneurs I know say, look, it's not a pan-European strategy to start. It's a country-by-country strategy to start under the EU umbrella. And it requires a different growth strategy, different growth capital, different setup, you can have different organizational structure. And that has to be taken into account.
Yeah, no, completely. So what I found is, first of all, stating the obvious is exactly what we're saying, right? Which is one big market versus. But what I have found is that it actually makes often European companies more international. So they're better at adapting the products, they're better at kind of addressing local markets. And that can then help with, Asia, with Middle East, with Africa for some companies and sectors, with, of course, LATAM and that. So that is very important. But yes, of course, the go-to-market on the US side is really a different equation, and some people find that much easier. And the strategics being so close to the VCs, as we discussed earlier, for the due diligence phase, the VCs can get a better sense of how the strategics are thinking, and hence it supports the thesis around the go-to-market and the product fit, and etc. And hence why there's such a focus on the funding, on not just kind of the initial seed, but the whole growth strategy. Because for the ones they get right, it's exactly your point. You then have one big market, it fits right, and then everything goes into the growth and the growth go-to-market, as opposed to supporting the thesis and getting customers and being profitable or some other kind of criteria which are not as kind of venture-ish.
Yeah. So we're going to try and wrap up in the next 2 or 3 minutes and frame a question for you to think about maybe 3 key takeaways for entrepreneurs who are addressing this question internally. In some cases, you may not have a lot of choice, but then the key thing is to understand what are the benefits of launching in the US versus Europe versus Middle East versus whatever, right? The relative benefits. And we've talked about some of those, whether it's by sector or growth strategy, access to other resources, et cetera. And one of them may also even be the types of capital that you might seek. For early stage, growth stage, is it institutional? You've used the term strategic capital a lot, which comes with great advantages, but also some real strings attached, things like that. So if you were to talk to kind of early to growth stage entrepreneurs, especially early stage entrepreneurs, kind of at that beginning, and they're thinking about this, to kind of come back to almost where you started, what would be 2 or 3, or right in there, kind of key points that you might want to leave them with right now?
So, and I may have mentioned some of these before, but just as a kind of wrapping up.
Right, this is a wrap up, exactly.
I think the first one is really, what are your, unique is a bit strong, but what are your differentiators? And those differentiators may drive you towards some of the features that are better in Europe or US or what have you. So I think that's extremely important, because there are different markets, there are different characteristics to a degree, etc. The second one is, what is your ultimate end game in terms of, exit or what have you? And because that will also dictate things. To your point, if your thesis is Europe because it's close to the strategics and institutions, that doesn't necessarily give you the same shareholding base and structure and growth and maybe exits as a big, US market or
Right.
something. So, and the third one I would add to the mix is probably, global versus domestic. I think if you're thinking really global, and if China and India and all kinds of other regions are as important as let's say Europe, and you can still find ways of getting the US, then maybe, why not Europe? If you're thinking the US market is the be all and end all and that's it, then obviously you need to be here.
Right, right. And I think that's a great way to wrap it up. So a number of key takeaways for entrepreneurs to think about as they're contemplating where to launch their business and where to grow their business. And Roger Spitz of Texistential is a great resource. It's not really where you focus as much these days, but I'm going to go ahead and include some information on his firm in the description, in the YouTube description. So if you need to just gain a little bit of insight, Roger, I hope you don't mind, they can reach out to you directly. Fantastic. Roger, great conversation. Looking forward to our next one and some of the other topics we discussed.
Wonderful, Mark. Thank you, everyone.